Okay, we're live now.
We're live. It's May.
And
Well, I think it's another pretty interesting month
because
I've bought more things, I've sold some things, and we've had the FOMC. And I'm not going to lie, I didn't even know what the FOMC actually stood for until right before you hit record.
yeah, this week's pretty crazy, isn't it? Because we've got so much like employment rates out, interest rates coming out.
Yeah.
It's earnings season.
I haven't looked at the employment rates, and I'm actually really interested because what I've always said is that the rate hikes will start pausing or cutting as soon as the employment levels start, more unemployment starts rising.
Yeah, I did. I think I saw something like that a couple of months ago, but I'd forgotten that that was sort of coincidental with it.
So anyway, this week, the Fed had their Federal Open Market Committee, which is what FOMC stands for. And as the market predicted, the interest rate in America has gone up by 0.25 basis points. So it's now at 5.25%. And the key is that for the first time, they've actually said, well, they stopped saying that we need to keep doing this.
I missed that.
Yeah.
But I did widely. I think it was just my perception was from reading Twitter and stuff that everybody believes now that this is the last time the Fed are going to hike.
Yeah, I can't remember their exact words, but it was more a talk of let's see the effect rather than any hint of continued monetary tightening.
Okay, that's pretty cool.
What was also interesting is that they made this big announcement that the banking system is sound and resilient. Obviously, we've had 3 very big bank failures in America. And I was looking at a chart this week. It was a graphic of 2008 where there had been hundreds of banks that all went under.
But those banks
But they were tiny. They were all very small. This time we've had 3, but combined as big as everything that happened in 2008.
Yeah,
So if this gets any bigger, if any more of these big banks, the size of any of the 3 that we've had so far, then it could be a very, very serious situation. So even the fact that they had to come out and say it's a very sound and resilient banking system, of course they had to do it, but there is potential worry that they even had to make that point.
Do you know why we're just talking about regional banks? Why is it regional banks that are so at risk? Is that smaller?
Why is it? It's because the government will only insure.
Yeah.
They've only promised to insure the bigger banks.
Okay, wow.
And so you're getting this run on the smaller banks. Everyone needs to move their money in order to be insured. You want to move it to the bigger banks.
I mean, I've heard rumors that they were going to put the kind of protection up to a higher level. In the UK, that's the FSCS level, which is what, 85,000
Currently, per person, it's £85,000 with each banking.
with each account.
Or you can have, if you had £85,000,
Spread it across different banks.
if you have more than that, make sure that you're with different institutions.
But obviously, something like NatWest is RBS. Yeah. So if it's held by another subdivision of RBS, you wouldn't be covered, right?
No, but only up to 85.
Yeah, only up to 85. Anyway, let's assume and hope and pray that there is no massive banking collapse.
Yeah. And I mean, just talking of big charts, I also saw something really interesting, and I can't remember what I was looking at, but it was actually very bullish on the US stock market, and therefore that would suggest the whole global markets really, if they're led by the US.
That was what?
I can't remember what this was, but it was this band of averages, basically. It was medians. And we're at a really key point. And historically, it is always bullish from here. We could backtest a little bit to, I think it's 4,000 on the SPX. But that would be the bottom, historically.
You know what really
We
annoys
do get 4,000. I think it's a good buying opportunity on the whole S&P 500.
Yeah, the S&P 500, I think, has seemed to have defied the odds here. It's looked so perilous over the last, well, at least in the last couple of months, when everybody was bearish. And it's just classic that when everybody is bearish, it's not going to do what the retail investors think it will.
Mm.
But still,
It's important to make the note. Sorry if I've interrupted
yeah, you did.
is that you have to ignore the noise, and the noise is the mainstream media. You've got to look at each stock for its own worth.
Okay.
You've got to find the value in it, do your own research, and ignore all the stories.
Well, this builds on what I was just about to say, so I'm glad you said that, because a couple of months ago, let's say start of the year, how bearish the media was all over my Twitter, all over the mainstream media about China, and on the back of the Ukraine invasion, China and the Taiwan risk there is basically saying that investors should get out of Chinese investment.
It's that point, it's the bottom where it's saying it's going to fall another 90%.
But 2 years ago, somebody asked me, okay, what's your top macro advice on markets globally? And I said, just invest in China. And that took time, but here we are 2 years later, and China, and crypto still, but China is saving my portfolio right now.
Yeah, wow.
You know, every American stock
still has fallen a lot. It's got a long way to get anywhere close to the highs that it had.
Yeah, of course. Yeah, a long way still.
And I do agree. As long as China doesn't do something stupid, like invading Taiwan, China would be where you'd want to invest.
But it's what they're saying, that no risk, no reward. You have to, as an investor, you have to be brave for the risk.
It is a big risk though, because like with Russia, and I know we both had some Russian stocks, I think it was maybe only one or two each, but you'd never expect something like that to happen, where they invade Ukraine and you get locked out of the market, and then we both sold to some buyer that gave us pennies on the dollar.
I mean, you can't lie, that hurts, and it was difficult.
But that would happen again if China were to do that and invade Taiwan.
But it's about managing your risk, isn't it, across a whole variety of assets all over the world. As Warren Buffett, I think it was him, once said, "Is your phone there? You don't need to." Sorry, I heard. As Warren Buffett once said, and I think it was him, that there's always a bull run somewhere in the world, and I think it's in China and India right now.
Yeah, I would totally agree. I have to say, I do feel the fear a bit. I am a bit more cautious, having seen what happened with Russia.
Yeah, of course.
So I'm holding my positions, but I am cautious about buying
exactly
into China more.
I'm pleased with how my Chinese positions are doing, and yeah, of course, a lot of me is saying, "Hey, take it off the table now. Let's bank that." But at the same time, there still seems to be a huge growth potential there. So most of my Chinese assets I am sticking with.
Cool. And going back to the market broadly, one other thing I wanted to say before we go on to our stock picks for the month is that it was 5% and now 75% over the last few months of tech stocks now have a rising 200 daily moving average. And whenever this has happened in the past, the average increase over the following 12 months has been about 16%. And this has 100% accuracy across the history of the stock market. That when 200 daily moving average of a stock is rising, it will be up. The average is then approximately 16% over the next year.
Where did you find that?
Can't remember where I found that, but about a year ago, it was 5% of stocks had a rising 200 MA, and now 75% of tech stocks have this.
Wow,
So it's very bullish.
It's surprising. I mean, this is what I was saying just a minute ago as well. But I hope that is the case for the American stocks now, because I have been, let's say, averaging into my American stocks still, and every month that I do, I'm just going deeper down the hole. Barely any of my American stocks are in profit. Be honest about that.
Wow.
And any that have, I've basically taken profit on, like Kellogg's and things like a couple of months ago, stuff like that. And I've made nice profit on some of them, but the American ones are what's dragging me down. Britain, great. Rest of Europe, pretty good.
Yeah, I don't
bring
think Europe and Britain, the UK, London Stock Exchange, I think a lot of stocks were undervalued, and we were saying this on eToro over the last couple of years. But the UK 100 is now at all-time highs.
Yeah. Can I just ask, have you got any favourite, like, before we go into individual stocks, what are your hot sectors right now?
Hot sectors.
Yeah.
For me, biotech, that has always been one of the main themes of my portfolio. It's one I want to continue. For someone like me, I'm 31, so I have a lot of time to invest to let these biotechs come to fruition, to reach their potential. So I'm risky, but I am also bullish on them. But I know that some of these riskier investments can take longer. That's why I want to do those now while I'm young.
Your biotechs look very promising right now. I suppose the other two sectors I'm quite interested in being EVs and weed stocks that can get pretty exciting when they run.
Yeah, I don't know what's going on with the whole legal. I know maybe it was 2 years ago, there seemed to be this whole thing where all the states in America were legalizing cannabis, and there was talk of the UK also legalizing it, and many other countries. It seems to have stalled. I haven't really followed that narrative.
No, I have a bit of investment in the weed stocks, but I'm not following closely at the moment.
I think I feel like the laws are still moving in that direction. Maybe it's being a bit slower. Maybe profits haven't come as quickly as people expected, or there's been more competition. So some of these hot picks haven't been quite as successful as they might have imagined, just due to competition. But yeah, one to watch.
Okay, what's next then?
Okay, shall we move on to specifics, what we've been buying this month?
Yeah, go for it.
Okay, my first one was Annaly Capital Management. It's an American REIT, which is a real estate investment trust. They recently beat earnings. Currently, it's $19, around $19, but analysts predict $20 to $24 over the next 12 months. Not a huge increase, but still higher than where we are now. Hedge funds increased their investment by $500,000 in the last quarter, so that's quite significant. It has a PTE ratio of 5, and the big attraction to it is the dividend of 13%.
Big dividends scare me sometimes.
They do, because can they maintain them? And if they can't maintain them, suddenly investors start running to the door. But right now, it's a very, very nice dividend to have, and I think it looks oversold. Moving on, 3N makes safety and industrial products, of course. I'm sure you will have used them. As I bought it, it was $106. Analysts are predicting anywhere between 95 and 120 over the next 12 months. So again, it seems like a pretty safe time to be buying some. Not a huge upside potential, but has a PTE ratio of 10 and a nice dividend of 5.65. It's just a blue chip stock, and I think I just feel safe buying it. Happy to build that position for the long term. Yeah, not much risk in that, I don't feel. Another one that I do like, and is a higher risk one though. I already bought a bit, I think it was last month, and I bought a little bit early. This month I kind of bought it officially, is Guardant Health. They do liquid biopsies like Illumina do, so using blood samples to detect cancer early. When I bought it, it was $22, and analysts have this. They expect it to reach somewhere between $53 and $60, so a really nice 100% or more if the analysts are correct. And also in March, so last month, the co-CEOs of the company bought nearly $5 million worth of their own stock. And as far as I can tell, this was not any compensation, just a given stock. This was them choosing to buy it. So not part of their performance. But yeah, their own decision to buy it. Kathy Woods also holds this. So yeah, she does a lot of research in this area and really believes in it for the future. Another one that I added to was FIS. They do financial services and are working on the crypto transition. Again, hedge funds increased their positions. This time, $12 million in the past quarter alone. So yeah, hedge funds really believe in this. I bought at $58.70. Analysts are predicting up to $71. Has a PTE ratio, so that's a price to earnings ratio of just 10, which is very good actually, and a nice dividend of 3.76, so decent. Also, I want to just say that they bought WorldPay for $43 billion in 2019, which was probably a bad idea really, because so they paid $43 billion, and now the market cap of FIS, including their acquisition, is only $35 billion.
Ouch.
Right? So perhaps that's mega value now as an investor, because you're getting both companies for less than that one was valued at a couple of years ago. And I've also heard that they're planning to spin off this year. So you will end up back with both companies again if you buy FIS now. The only problem with that as an investor in your portfolio is that it will look like FIS lost value.
Yeah.
Because they will literally just give it to you as eToro will either give it to you as a dividend or as a new stock, but you'll lose that value from the FIS stock that you hold.
That's just how it looks on paper. That's not a problem.
Yeah, it is a little bit. It looks bad on paper. You still have to get a free new stock or dividend. The other one that I think I bought early last month, and again I kind of officially bought because it met all my criteria at the end of April, was Primary Health Properties, health centres in the UK. They have all these NHS contracts. There were insider buys in March, including from the chief financial officer. So I really love it when I see that. I bought at $105, and analysts are predicting somewhere between 100 and 150 over the next 12 months. So a nice 50% upside and a really good dividend of 6.5%. So those are my main buys. Quickly going to go over two others that I also bought. They didn't meet every one of my criteria, and I technically shouldn't have bought them, but I just couldn't resist it. The first one was Twist, which is a biotech, and the other one is Vodafone, that I'm sure you would have heard of, that I just had another look at, and I just thought it looked really good value. So yeah, that's everything I've bought, and I also sold Louisiana Pacific LPX. I actually didn't expect to sell it. I set a take profit on that that I forgot about, and made a nice 9% on that. But that is a position that is now gone from my portfolio. That's everything I've done.
So that was all your buys and all your sells?
Those are my buys and sells. Yeah, May.
I'll have a look at what I've bought and sold then. I had a little cheeky buy on XRP again.
You love the XRP, don't you?
It was just an instinctive buy, just no technical analysis, no news in particular, just me holding true to my passion.
Once you've done research on something and you believe in it, it's always good to check in. Does that still hold true? Are the fundamentals still there? But otherwise, just dollar cost averaging in every month, buying a little bit of something that you really like.
It is just that,
because it's a really good method.
I feel like I've done the bulk of my buying on XRP, and I'm happy with the amount of XRP that I have.
Mm-hmm.
But
and also, sorry, I made it sound like, oh yeah, you like that one, yeah. But I also really like that. It is the biggest position in my portfolio too.
Yeah. So what happened this week? I think we had a little bit of a crash. The fundamentals for me are still looking really solid, and I just thought I'd take advantage of that pullback. So I'm still remaining, obviously, very optimistic about it towards the end of the year and into next year and beyond. Anyway, but I also bought FSJ.
SJ, I've not heard of that.
FSJ, James Fisher and Son.
Oh, okay, yeah. What do they do?
They're like maritime
Penny stocks?
stations. It's no, not penny stock. No,
Because I know you were interested in penny stock, maritime.
oh, you mean like top ships and stuff?
Yeah,
Like that?
that's what I'm thinking. Top ships.
No, it's more like engineering.
Okay.
So yeah, on that one and casino, French supermarket. I think I've spoken about them before, and Electromechanica.
So Electromechanica, they're an EV play, but don't they have a unique? Don't they bring something unique to the market?
Well, they're 3 wheels.
3 wheels, yeah, that's it.
Okay, well, I'll come back
And
later.
wait, Solo Mechanica, is that because only one person can ride it?
Yes, that the ticker is Solo.
Yeah.
Well, that used to be the case.
So I think that's interesting because I think I do find that something that maybe I would consider buying. Something that's like electric motorbike, but it's a bit more of a car. I like that.
Yeah, I mean it's good. Anyway, I'll come to it in a bit.
Okay.
I'll say what I've sold as well. Telenor, which is also something I've definitely spoken about recently in previous episodes, and China Telecom.
Okay, but I thought you liked China.
I do. So we'll come to that. So I sold Telenor ahead of earnings and ahead of it turning ex-div because it had grown 50% since December, which was probably when I actually most...
Do you mean you took 50% profit?
Not exactly, no. I think I've been buying that one since 2021.
Okay.
I bought new positions around the turn of the year, and since then it had grown 50%. So it's paid like a dividend of 7%.
Nice, yeah.
And I took it at just above break even.
Sometimes when it's fallen that hard, but then it makes that quick of a recovery. Yeah.
It was a super quick recovery with no like
Not enough strong fundamental
tests in between. It's grown a lot faster than other telecoms. And I know there's certainly other people out there who would look at that and say, well, there's your market leader right there, and it's going to keep going. But for me, as a 7%, it's grown very rapidly to break even.
Yeah.
And I feel uneasy about any retesting.
Yeah, I mean, with Momo a couple of months back, it just recovered so quickly. I just thought I need to take some of this position off the table, even on only a break even or taking a few percentage in profit.
So let's say that's 7%. I mean, that's over 2 years, it's 3.5. It's kind of a bang average interest rate over the last couple of years. All right, I'll take it. It's not great, but it's not a loss. BT's in a similar situation, but I feel like the chart looks a little better on it. I think from a technical point of view, I feel like that has a lot further to run. In the long run, the more I zoom out on the chart, I just feel like there is so much potential on BT.
But it's amazing how a couple of months makes so much difference. From when it's in a bearish trend, all the news is it's got so much further to fall. This company is just going to zero. Down, down, down. Every reason to be negative. As soon as it prints a couple of positive months, the news story changes and this is going to go so much higher.
Yeah. What I'm saying is BT is back tested in a way that Telenor didn't.
Okay. So it's proven itself, its level. You feel comfortable that this level should hold and it should only push on higher.
It's turned resistance into support.
Exactly.
Whereas Telenor now is hitting resistance.
So unless it is still super strong and breaks through, most likely it's going to go back down again until it finds some support lower down.
It could do. Oh, yeah. This is also what I feel with China Telecom, where I sold at a 75% gain.
Nice.
And I'm really pleased with that one.
Yeah, fair enough.
But we're also looking at it on an adjusted scale for dividends, that is.
Okay.
At potentially breaking into price discovery really soon. which it could do, but this is the third attempt at doing so, and it's seemingly struggling to break through. So I'm happy with the gains that I've made there. I'm going to wait and see if it can flip that resistance before I consider re-entering. Anyway, let's go on to what I'm buying. I just want a quick note on here, on the sectors again, and ETFs and stuff. The whole of the ARK funds, you're talking about Cathie Woods, they look really good right now. And I think one of them gained about 7% today, and that kind of like, was it ARKX maybe? What was that for kegs? But yeah, it kind of, flashed up on my screen today of being a big riser. And I thought, wow, yeah, I'm gonna check these out. And actually, yeah,
I think all the ARK are good buys.
All look really nice.
I mean, good buys, not good buys from your portfolio.
See ya.
Keep them, buy them.
Yeah. So the other thing is the biotechs, as you said, and we both sort of mentioned earlier too, looking good. There's a few.
So biotech is a big feature of your portfolio too.
It's not yet, but it's definitely something I'm adding to. There's two individual stocks. Did you say something about Allergene earlier? Allergene?
I may have spoken to you about that. That is on my watch list.
And Iova.
And I do own a bit of Iova.
You do, because they look like phenomenal short squeeze potential. I haven't done enough research yet to commit to buying, but I mean, I definitely appreciate
it. Looking to add, but I just haven't quite seen it looking right on the charts yet.
Yeah. Which made me think, okay, well, especially with biotech, where it's very volatile and you've got companies that just may or may not have a breakthrough, it definitely feels more like gambling, which is why I feel more inclined to go with an ARKG fund or something like that. Yeah, take an index fund. Yeah, Fisher James, what was I saying? Talking about that individually, they seem to have turned the corner. The legal problems are a little way behind them now. They made a return to profit. Legal problems, what were they? They were banned from operating in certain territories. I can't remember why, but
it happens more often than you can imagine, doesn't it?
Yeah.
Dodgy stuff going on in companies, bribery issues, and getting banned from places. Yeah, I mean, in the banks, the crypto, I could go on to a whole other thing about crypto, but people say that crypto is used for money laundering and illegal things, which of course it is. But the amount that the big banks get fined all the time for illegal activities, that they know what they're doing. It's not just they facilitated something by accident.
Yeah, a big company, Standard Chartered, was in a lot of trouble. And soon after that passed, they did pretty well. So I'm optimistic the same will happen here. They've signed a really good contract in the last month or so with Hitachi. And their CEO sounds very confident that their verticals are all looking really robust into 2023. I feel like it's very oversold, and we now have a good position. I don't know how high it can go, but I think we can see some nice profit. The casino, as I said, was my other one. French supermarket, huge financial trouble. Could just about to be saved by $1 billion investment from Czech billionaire Daniel Kretinsky. And that interest is really encouraging, because I think most of the fear around this stock is probably priced in. So if it gets saved, if they can turn the corner here, there is a lot of fear that has dragged that stock price down a lot. And I think you look at other French supermarkets like Carrefour that are doing well. If they can replicate that to some extent, they'll be all right. But yeah, as I said earlier as well, no risk, no reward. There's huge risk in here.
Supermarkets have been doing really well, actually. I bought a little bit of Tesco a couple of months ago, up 25% in 2 or 3 months. Did the same thing with Morrison's a few years, like last year.
Morrison's were struggling. Turned around. Well, they got a big buy-in from a US company,
private, I think,
consortium,
US company.
So yeah, there is big risk. around casino, but let's say it's a managed risk, a small risk with potentially very nice rewards. So we've got a little bit of casino, and I would say the same theme applies to Electromechanica, Solo. There's huge turnarounds happening in this company, and that sounds more positive than maybe it is, because they're in real trouble, having sold only 429 of their vehicles. Maybe that's to their saving grace, because they've had to recall every single one of them, buying back in it.
Only sold 429 vehicles.
Their three-wheeler auto cycles. Yeah.
That's awful. That sounds horrific.
It doesn't sound great, does it? But they've had to buy them all back.
Okay. I was imagining like hundreds of thousands.
Yeah, now it's kind of a good thing that they only had to buy that many back.
Yeah.
And they, because of laws in the US and Canada, this kind of three-wheel situation isn't really working out.
No.
I not.
I don't feel very positive about this company.
I don't feel too positive, but rules are rules, as we say, and when the algorithm is saying buy, I've got to buy, even if this is a get out of jail free.
No, like I said earlier, though, I do like the concept.
Well, look, if the CEO can turn the company around, as she says she can, with the Roadster, which is now a two-seater, that can potentially rival something like the other EV makers, Tesla and stuff like that.
Yeah.
It's becoming, the EV market is becoming more competitive. There's a price war going on with Ford as well.
But I do think they're better off carving out their own niche than competing with something that everyone else is doing.
Like, it was great, I think, the concept. I was really pleased with the idea that they had something unique. A three-wheel car, solo passenger, affordable. Because most people commuting just take themselves. They want something they can get affordably around. You don't need that.
Stay dry.
Stay dry, yeah.
With the wind.
Basically a motorbike, but
yeah,
more protected.
In a little bubble.
Anyway, they've gone four-wheel now. They're going in a new direction. And the outlook is a lot more positive.
Good.
They've got a lot more pre-orders for it anyway than they did the three-wheeler. And in the meantime, before they can finish development on that, they're manufacturing in their plant lots of vehicles for Volcon, which is another bike. They do off-road vehicles, motorbikes, stuff like that.
Okay.
Alternative EVs. So they do have cash flow. They can survive.
Yeah, so I imagine if they do survive, really actually get through it.
If they do survive and they can produce a really cost-effective rival EV that is compact, they do have potential to be very profitable, and that take even a small market share of Tesla.
Mm.
So that kind of sums up my month, which is not a lot, not much happened this month.
Oh, so any closing thoughts?
No.
All I'm going to say is just something that occurred to me is that as much as this year has been a good improvement on last year that was just red, there are still some positions in my portfolio that are just awful, that have gone almost to zero. So I just want to say that the reason I hold on to those is that I will use them to tax loss harvest the gains that I'm going to hopefully make this year.
Yeah.
And I mean, largely it's going to depend on the next crypto bull run. I still really believe in actually every position in my portfolio. I just think the market, the interest rates have just made them suffer so hard. So my plan really is I will sell those positions to offset the gains that I make either this year, next year, the year after, so that I pay less tax on them. And then you wait a bit, at least a month. And then if I still like them, if I still believe in their story to be successful, then I will just rebuy those at these low prices that they're currently at.
Actually, just saying that as well, it makes me think, I do want to add one thing. And I'm saying here, I'm so bullish on China. Then why are you not buying China? Why are you buying more American stocks? They're doing really badly and underperforming. That's just my style. For me, the Chinese ones that are running, I'm going to leave them to run, and I'll take the profits when it's time. But for now, I'm focusing on building the foundations for growth in America.
It takes a long time, but you're ahead of the market. You're trying to think ahead all the time.
Absolutely.
Where's it going next?
Yeah, that's exactly it.
Rather than just jumping on at the top of a trend.
Yeah, even the middle of the trend. But yeah, sure.
Yeah.
Right, we're wrapping this up. We're done.
Let's wrap it up.
All right, thanks for listening.
See you next month.